Hi everyone, Josh Gilbert here and welcome to Stock Break, where I give an in-depth analysis on public companies in under 5 minutes, breaking down their fundamentals and potential valuation. So let's dive in. Hello everyone and welcome back to another episode of Stock Break with me, Josh Gilbert. Today we're going to be diving into gold. More specifically though, the SPDR Gold ETF, also known as GLD. Interestingly, it was actually the first gold ETF ever to list on the market. Gold prices have recently just hit a record high. We're over $3,080 an ounce, and it's reminding investors exactly why it's long been considered a safe haven asset. So today I'll break down why gold is rallying right now, how investors are getting exposure, and whether gold still deserves a place in your portfolio in 2025. And if you're not already, don't forget to hit subscribe to get all the latest episodes. And of course, before we get started, a quick reminder that this presentation is for educational purposes only, should not be taken as investment advice or a recommendation to buy or sell any financial instruments. So let's get into it and let's start with what's driving this rally in gold prices to record high. So what we can see here is that since the start of 2025, gold prices have continued to rally. And ultimately what we're looking at here is the GLD ETF price. So since sort of late March of last year, we can see that sort of rally, that move higher up until the start of this year. And this year we've now actually seen prices up 18%, while the S&P 500 is actually down. We've seen renewed uncertainty in markets, especially around President Trump's return and latest tariff threats. And that kind of unpredictability puts markets on edge. Investors are witnessing a trade policy that is changing from day to day. And ultimately, Trump is taking aim at most countries, right? Regions. It's not surprising that more investors are seeking cover in the precious metal. When investors feel uneasy, gold is often where they go. Another key driver has also been this sort of continued geopolitical uncertainty, from tensions in Europe to instability in the Middle East. Global risks have kept investors on edge. And then we've got central banks as well. Basically, in recent years, countries like China, India, they've been adding to their gold reserves at a record pace, and they're still bullish. So this is a report here from gold.org. Places like China and India, they're sort of moving away from that reliance on the US dollar. And this institutional demand that we're really seeing, even at the start of this year, is a powerful tailwind for gold. Interestingly enough, a bit of a fun fact for you here, the standard gold bar that you may see in movies, it's known as the gold delivery bar. It's 400 ounces of gold, or about 12.4 kilos. And now with record prices, one of those is going to set you back a cool $1.2 million US dollars. So that just shows how far we've come with those record prices. Look, one of the reasons gold has become so accessible to investors over the years is thanks to gold ETFs and similar investment products. In the past, if you wanted to invest in gold, you'd have to sort of buy physical bars or coins and worry about the authenticity, find a safe place to store it, and then you'd have to find a dealer to sell it when you want to cash out. Today, we've got ETFs like GLD, as we've mentioned, and they're seeing huge interest from retail investors. They've sort of streamlined the process. When you buy this, a slice of a gold ETF, you're essentially purchasing a piece of the physical gold. For example, if we look at GLD, it stores gold bars in London vaults on behalf of shareholders. As I say, you haven't got to worry about sort of security, insurance, transportation, any of that. With a gold ETF as well, you can trade the gold just like a stock. Anytime the market is open, if you need the cash or want to rebalance, you can do that as well. And just a quick chart here to have a look at sort of the daily fund flows that we're seeing into GLD, into that gold ETF. So far this year, we've seen 2 record days. So this was the sort of the highest day that we had back in February, when sort of really geopolitical tensions sort of picked up, and we also saw Trump sort of moving through with those tariffs. But also in March as well, we saw record inflows as well. So again, huge demand coming from retail investors. And this is because gold is often seen as that financial security blanket. We're not sort of really investing in gold to sort of see that huge growth that you would maybe get from tech or AI or crypto, for example. Gold has historically seen low or even negative correlation with stock markets. So when stocks drop, gold has often been, held better. It's held up or sometimes goes higher. So if we look at data that sort of backs that up, if we look at major stock market corrections, gold has either fallen far less or it actually has gone up. So it doesn't always outperform, but it does move in a different rhythm to share markets. So if we look back in the last 25 years, the S&P 500 has finished down just 7 times, which is pretty surprising. But in 6 of those 7 years, gold has outperformed the S&P 500. So it goes to show that it is essentially that bit of a diversifier. It adds up something a little bit different to a portfolio. Now, you might also be thinking as well, what about gold miners? Well, they are rallying at the moment as well. In fact, the top 5 performers on the ASX 200 this year, they are all gold stocks, and they're up over 40% each, led by West African Resources, which is that top performer. Look, gold miners are a little bit more volatile. They carry this operational risk, and of course, they do come with the complexities that gold itself doesn't have. But when gold prices rise, their profits can surge. Look, in this sense, I think some investors will take a two-pronged approach, core exposure through gold ETFs with a smaller allocation to miners for potential upside. Look, I can hear you all asking, Josh, what about Bitcoin? There's this debate, Bitcoin versus gold. Well, Bitcoin is often dubbed as digital gold, and there is a place for Bitcoin in a diversified portfolio as well, especially as institutional adoption grows. But in a time of crisis, Bitcoin has shown more volatility than gold. So while both have a role, Bitcoin is promising but still a maturing asset. Under the right conditions, it can potentially act as a hedge. However, it still falls short of the consistency that traditional hedges such as gold has offered in the past. And for now, Bitcoin is a bit more of a speculative asset. It's more of a long-term store of value for investors rather than a safe haven. So does gold still deserve a place in your portfolio? Well, I mentioned earlier about that sort of performance of gold. And if we just have a look at it, this is the last 25 years. And you can see those sort of green boxes there sort of signifies those years where gold has outperformed the S&P 500, and the red is the year that it didn't out of those 7 years. And even in other times, gold has actually outperformed the S&P 500. I was more sort of talking to the down years for the S&P 500, but there's been other years when gold has outperformed. Look, for many investors, does gold deserve a place in your portfolio? The answer will be yes. It's not about chasing huge return. It's about adding that balance, the stability, and a hedge against seemingly the unknown. Look, gold prices, don't come without pressure from here. If we still get a US dollar that's pretty strong and interest rates remain high, that's pretty interesting because usually when we see sort of inflation move higher, often gold can perform pretty well. But right now, with uncertainty in the air and demand staying strong, the case for gold looks pretty solid. Look, major banks, Goldman Sachs and Bank of America, they're expecting prices to push towards 3,500 over the next 2 years. So it means that the story might not be over for gold just yet. There are plenty of gold ETFs on the eToro platform. The one we've spoken about today is GLD to gain that exposure to gold as the asset. And of course, plenty of gold miners like Newmont Mining available on the eToro platform. Thanks for tuning in to this episode of Stock Break. Let me know in the comments what you think about gold's prospects moving forward. And to stay updated with all things investing, make sure you follow us on all podcast platforms. Just search for Digest and Invest.